So, good afternoon, friends. So, let us start today's session. uh, as I discussed in the last session about the concept of the residential status in the context of international taxation, and the objective of the last session was to discuss that the taxability of a non-resident arises in India only to the extent of the income attributable or accruing or rising in India. But the income of a resident, the global income of a resident is taxable in a particular country. But if one is a non-resident, then the income only to the extent of accruing or arising in India is taxable. Now, Section 9 of the Income Tax Act defines what is the meaning of the income accruing or arising in India. Section 9 says that all income accruing or arising, whether directly or indirectly, through or from any business connection in India, or through or from any property in India, or through or from any asset or source of income in India, or through the transfer of capital asset situated in India, will be taxable in India. Now, this is what the Income Tax Act Section 9(1) says. Now, what is the reason of discussion of the concept of permanent establishment? Now, Section 9 uses the word business connection. It does not use the word permanent establishment. Business connection, the meaning of business connection is wider in nature compared to the concept of permanent establishment. The reason the determination of permanent establishment is important is that if there is a permanent establishment, then only the income accruing or arising from permanent establishment of a non-resident will be taxable in India. Now, by virtue of the double taxation avoidance treaties, there are some categories of income, for example, income from royalty or income from fees for technical services, wherein the right of the source countries, that is the right of the country in which the income is accruing or arising, is limited. For example, if a Indian resident is making payment to a non-resident with respect to payment of fees for technical services, then as per the double taxation avoidance treaty, as India has entered into with the most of the countries, the right of Indian tax jurisdiction to tax with respect to fees for payment of technical services will be only, say, 10% or maximum 20%. But suppose if a non-resident is providing any services in India through a permanent establishment, then it will be taxable as business profit. And in that case, the right of Indian tax jurisdiction will increase. So if suppose a engineer who is rendering service in India with respect to a technical service, if it does not have a permanent establishment and he renders such service from his source country, the country of his residence, then the right of the Indian tax jurisdiction will be limited to maximum 10%, as because India has entered into double taxation avoidance treaties And as per Double Taxation Avoidance Treaty, with respect to fees for technical services, the maximum withholding tax which India can deduct is 10%, or a maximum with respect to some countries, it is 20%. But if that engineer has a physical presence in India through a permanent establishment, then the income accruing or arising from that permanent establishment will become entirely taxable in India at the maximum marginal rate. For example, if it is a company, then it will be taxable at the rate of say 25% or 30%. If it is a individual, then it will be taxable as per the slab rate. So this concessional rate of tax, which is available with respect to fees for technical service, will not be there. I take a different example with respect to, suppose, a trader. If suppose there is an exporter who exports good to India without any physical presence in India or without any permanent establishment, then such a non-resident will not be liable to pay any tax in India. But if suppose he decides to open a branch office in India and the trading is done through that branch, then the income attributable to that branch will be taxable as business profit in India, and he will have to pay tax as per the tax rate applicable to a non-resident. So that is why it is very crucial to determine whether a non-resident has a permanent establishment in India. Similarly, for any Indian resident who is either performing services abroad or selling goods abroad, it becomes crucial to determine his tax liability in the foreign jurisdiction, depending upon whether such a Indian resident has a permanent establishment in foreign country or not. So now let us discuss about what is a permanent establishment. Permanent establishment is defined in Article 5 of the Double Taxation Avoidance Treaties. Now, Article 5 Article 5 says that now the concept of permanent establishment as per Article 5 can be bifurcated into three parts. One is a fixed place P. I will illustrate and discuss about what is a fixed place permanent establishment. I will refer to permanent establishment for short as PE. So one is a fixed place PE. Second is a agency PE. Third is a installation PE or service PE. So there can be three categories of permanent establishment: fixed place permanent establishment, agency permanent establishment, installation or service permanent establishment. Now, what is a fixed place permanent establishment? Fixed place permanent establishment means a fixed place of business through which the business of an enterprise is wholly or partly carried on. Now, it may include a branch, it may include an office, it may include a factory, a workshop, a warehouse, a mine, a oil or gas well, or quarry, or the place of extraction of natural resources. So the crucial test for determining whether a non-resident has a permanent establishment or not is to find out whether it is a fixed place of business or not, and that physically located premises is at the disposal of the enterprise. Disposal means the enterprise has the right to use the said place and has the control thereupon. It is not necessary that the premises is owned or even rented. It is sufficient if the premises is at the disposal. So even renting is not important, ownership is not important. What is important is that the premises is at the disposal of the enterprise. Now let us try to understand it through an example. Suppose an engineer, foreign engineer, provides service in India. Now for the purpose of provision of his service, his client allows him to use a chamber in its premises or a place of business in its premises. Now it can be considered as a PE subject to the control or the access he has over that place. Suppose he has unfettered right of that place and he can do business or provide his services not only with respect to that client, but also with respect to his other client, or he conducts his other activities also, then it can be said that it is at his complete disposal because he has a control over that place. He has unfettered right to access to that place. But if that unfettered right is not there, then it cannot be said to be a permanent establishment. Mere access to a place cannot be said to be that one has the place at his disposal. He must have not only the right to use, but he must have a control over that place of business to qualify it as a PE. So it is the inclusive definition which is there in the permanent establishment is only illustrative in nature. It is not that only a branch, an office, or a factory, or workshop, or a warehouse, or a mine can be considered as a permanent establishment. Any fixed place of business through which a business can be carried on can be a permanent establishment, irrespective of the fact that an individual or an enterprise has that place of business at its disposal. Now, let us discuss the second type of PE. The second type of PE is when a non-resident carries on some construction activity or installation or assembly project or supervisory activities in relation thereto. For example, suppose an Indian entity imports a machinery from abroad, and apart from importing the machinery, there can be two scenarios. One is that the installation contract is also awarded to the foreign country, foreign company. Secondly, installation is done by the some Indian contractor, but the supervisory of that installation is conducted by that foreign supplier. In both the scenarios, it can be considered as a PE depending on the double taxation avoidance treaty. In most of the treaty, if such installation activity or supervisory activity continues for a period of more than 6 months, then it will be considered as a PE, and the income attributable to such an activity will be entirely taxable in India. It may be that the country of the residence will have to give the credit for the tax paid in India, but as far as the country in which the permanent establishment is there, for example, if in India, a foreign company continues the activity of supervision of an installation activity or the installation activity for more than 6 months, then in most of the cases, such a contract for installation will be taxable at the rate of 30%. But if suppose this period is less than 6 months, then it will be treated as a fees for technical services. And in that case, it will only be taxable at the rate of 10%. So now I think you will be able to appreciate the difference or the consequence of having a PE or not having a PE. So it is not only that a fixed place of business is there, but if this installation or supervisory activity or a construction activity is carried on in the foreign country for more than a specific period of time, then it is considered as a PE, and the country in which such activity is carried on is entitled to tax it at the rate applicable to a business profit. And there is no concession if in the rate of taxation, if a PE is there, it is taxable at the full rate of tax as it is applicable to a foreign enterprise for carrying on the business activity in a country. Now, third category of PE is where the services are rendered for more than a particular period of time, again 6 months or 9 months. So it will depend from treaty to treaty. But if the services are rendered for a more than particular period of time, then it may be considered as a PE. Now, Article 5 excludes certain activities from the purview of the permanent establishment. One is if there is a facility, that means there is a fixed place of business. But if it is used solely for the purpose of storage, display, or occasional delivery of goods, then it will not be considered as a PE. If it is used for maintenance of stock, but the stock is only for the purpose of storage, display, or occasional delivery, then it will not be considered as a PE. Thirdly, maintenance of a stock belonging to the enterprise solely for the purpose of processing by other enterprise. Fourthly, the maintenance of a fixed place of business solely for the purpose of purchasing goods or merchandise or of collecting information for the enterprise. Lastly, the maintenance of a fixed place of business solely for the purpose of advertising, for the supply of information, for scientific research, or for other activities which have a preparatory or auxiliary character for the enterprise. Now, two categories of PE I have discussed. One is fixed place PE. Second is installation PE. Now, the third category of PE is agency PE. Now, agency PE means suppose a foreign company has an agent in India, and that agent in India, he has the authority to negotiate and conclude contracts on behalf of the foreign enterprise. Then it can be said that that agent is a PE of the foreign enterprise, and whatever business is conducted through that agent will be treated as a business profit of that foreign enterprise or non-resident, and it will be taxable in India. Second is if the agent maintains stock of goods, not the stock of goods as I've already discussed, which is excluded, that is for the purpose of display or storage or occasional delivery, but he maintains a stock from which a regular delivery of the goods takes place on behalf of the foreign enterprise, then that agent will be considered to be a permanent establishment of the non-resident or foreign enterprise, and the income accruing or arising through that activity or through that agent will be taxable in India. But if the business is carrying on through a general broker or commission agent who is independent, who is not subject to control of the foreign enterprise, or who habitually does not does not concludes contract on behalf of the foreign enterprise or maintains stock of the foreign enterprise, then such a agent will not be considered as a PE. But if suppose a agent is there who does not conclude contract also, who does not maintain stock also, but he himself is subject to control of the foreign enterprise, then also he will be considered to be a PE of the foreign company. So I have discussed these three kind of permanent establishment. Now, I must tell you that since now the business is not only carried on through this fixed place of business, the world has moved on, and now a lot of activities happens over the digital platforms. So in order to tax the activity of the foreign enterprise through this digital means without a physical presence, is sought to be taxed through the concept of significant economic presence, and also a concept of equalization levy has been introduced. Now herein, if the foreign enterprise has a significant economic presence in India, even without a physical presence, it can be taxed in India. And but I will discuss the concept of significant economic presence and equalization levy in a separate session, because today I wish to only discuss the concept of permanent establishment in the nature of fixed place PE, agency PE, and installation PE. So these are the three categories which I wanted to discuss today. There is another thing also, that over a period of time, because of this digital nature and other tools, the 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 many the business entities have been taking advantage of this double taxation avoidance treaty. So now there is a multilateral instrument whereby the governments have entered into some sort of a agreement to prevent base erosion and profit shifting. Now India has entered into and is a part of group which is in short referred to as MLI, and it is a tool to modify the existing tax treaties to prevent base erosion and profit shifting without actually negotiating or making amendment in the double taxation avoidance treaties. This is a concept to close loophole in the tax treaties without having to renegotiate each treaty individually. Now, this is also a concept which will require elaborate discussion, and I will discuss that in a different session. But I just wanted to discuss all these things because these two concepts, the significant economic presence and the concept of MLI, has made some amendment in the concept of permanent establishment, as it is there in the various treaties entered into by India with various countries, and the criteria for understanding the concept of permanent establishment has been amended through PLI, and wherever due to significant economic presence or digital presence, the benefit of double taxation avoidance treaty or the concept of permanent establishment is being taken. An equalization levy has also been imposed, but I will discuss all these concepts in some other session. I would like to conclude today's session. If anybody has any query relating to today's discussion, then I will be very happy to answer them. Thank you.
Hello.
Yes, Mr. Manas.
Sir, actually, I have one query, sir. To establish the PE, I am from Sriram Pistons and Rings Limited. Hmm.
You are from?
So actually, to establish the PE,
Yes.
what should be the main criteria?
You see, the main criteria is whether the non-resident has unfettered access to a fixed place, a physical place. It is not necessary that a non-resident has a ownership control or the rental agreement with a Indian entity. For example, if foreigner is coming to India and his client is allowing him unfettered access to a fixed place of a physical space, then it can be said that the foreign enterprise has a permanent establishment in India. The client may not be charging him any rental or may not have, the client may not have uh, entered into any sort of an agreement. But just by virtue of the practice, he has allowed, the Indian entity has allowed unfettered access to the non-resident or a foreign enterprise, then that place of business will be treated as a permanent establishment. Now, in the absence of a ownership control or a rental agreement, it may be difficult for a tax authority to establish that that fixed place of business is a permanent establishment. But nevertheless, if the Indian tax authority or the foreign resident himself declares it, because there are many or most of the non-resident or foreign enterprises, they do not want to avoid tax. So if we are acting as a tax advisor, then it is our duty to correctly advise after understanding the facts from, suppose, a foreign enterprise or a non-resident as to what kind of a physical presence a non-resident has in India. We advise or guide them correctly. And I think most of the foreign enterprises or non-residents are happy to pay tax rather than to evade it.
Sir, what is the criteria of 6 months?
No, criteria of 6 months arises only in the case of installation or construction activity, not otherwise. Suppose you are just a trader or you are a foreign technician or an engineer who is providing technical services, then this concept of 180 days does not arise. It is only in the case of installation or construction activity.
So in that scenario, if we establish the PE case as you have guided us, then 30% tax rate will be applicable
Correct. Right.
as business is income for that foreign company.
Correct. Right. Absolutely correct.
Thank you, sir.
Thank you.
Good afternoon, sir.
Yes, Mr. Chaturvedi.
Sir, I have a query about this.
Yes.
Yeah, sir, what is the role of Form 10F?
Regarding that permanent residency.
Yes, yes, sir. In case we are deducting any tedious amount of the person who's non-resident, then
Right.
what is the role of 10F in India?
No, you see, the purpose of a residency proof is that one is a no, to determine the country of residence. Because you see, the criteria for resident and non-resident is different. If suppose at the threshold you are a resident of India, then you need not go into this concept of permanent establishment and all. Because of one is a resident of India, tax resident of India, then your global income becomes taxable in India. So the first threshold is to determine the residential status. Then the second thing is that if you are a non-resident, and then still if you have a permanent establishment in India, then the income attributable to permanent establishment will be taxable as a business profit. So that is the purpose of determination of permanent establishment. Because suppose an engineer or a foreign company is doing business in India or rendering services in India, and it also has a permanent establishment, then income attributable to permanent establishment will be taxable as a business profit, and the full rate of taxation becomes applicable to the taxation of the business profits. So that is the purpose.
Sir, in this case, is non-resident can claim the benefit of the taxes paid in India in that country where he
Yes,
lived?
yes, 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 of course.
Okay.
That is always there. Suppose a foreign resident has paid 30% tax in India, and in his country of residence, suppose the rate of tax is say 35%, then he can set off 30% against his tax liability, and balance 5% he will have to pay in his country of residence also. But suppose the rate of tax in his country of residence is only 20%, then he will get set off only to the extent of 20%. It is not that in the country of residence he will be getting a refund of this excess 10%, because a foreign jurisdiction will not allow refund of the taxes paid in India. At best, it can be allowed as a set off against his income against the in the country of his residence.
Sir, one more query.
Yes.
Generally, if we are saying to the non-resident, give their the status of permanent establishment in India, then we just take a declaration from that person's. He's non-resident. He has not having any permanent establishment in India. Then this is sufficient for declaration for us, or is something additional requirement we have to take care of this?
No, as a, you see, there are two stages. One is that somebody is coming to you for an advice. And if you are, I mean, giving somebody a advice, somebody wants to know from you whether he is a permanent establishment or not. Somebody, suppose a you have the responsibility of taking care of the tax compliance of a non-resident. In that case, I think instead of just relying upon a certificate of your client, you should try to ascertain the facts as to what are his activities in India, for how long he stays in India, and all those sort of things which defines a concept of permanent establishment. But suppose you are a chartered accountant and you have to give a certificate under Section 195, or you as a uh, payer, you have to deduct or withhold TDS, then you cannot,
Yes.
I mean, engage into a detailed investigation of the activities of your client. Then I think if you take a certificate from your client about him having or not having a permanent establishment, that would be enough.
Being a consultant, we have to advise about we have to give the section reference article 5 as you suggested at DTAA
We have to,
on the.
we should be giving the correct advice to a non-resident. Also, you see, we should be loyal to our country.
Yes, sir.
That if suppose the non-resident is liable to pay more tax in India, then I mean, he should be taking the full rate of tax in India instead of we giving him advice to evade tax. But if suppose
Yes.
he's not, I mean, we should be giving advice as per law. But suppose if we have to just give a certificate or we have to withhold certificate, then we cannot act as a investigator and to investigate his activities as to what all he is doing in India. Then we have to just rely upon the certificate given by him, or depending upon our contract, we can determine. Suppose we or ourselves have given an installation contract, obviously we have a record of his number of days presence in India, and that basis we can take a call as to whether he has a permanent establishment or not.
Okay, sir. Thank you, sir.
Okay, thank you. Okay, Anil, Mr. Anil is asking a question to me. An SSE is paying commission to a non-resident. An SSE is paying commission to a non-resident for services rendered outside India. What proof to be taken from non-resident? Now, if you are just paying commission to a non-resident for services rendered outside India, then I think the income does not accrue or arise in India at all. And in that case, you are not liable to withhold any tax, and you don't need to obtain any proof or anything from India, because a non-resident is liable to pay tax in India only if the income accrues or arises in India. If the income is not accruing or arising in India, then you are not liable to withhold tax, and the non-resident is not liable to pay tax in India.
Sir, one question more, sir.
Yes.
Sir, in case, sir, if no PEs is there, as you have explained, there are three types of PE. Suppose such an import service is there where vendor is not falls under the three types of PEs. But we have obtained service.
What I couldn't follow you. There is some voice coming from, your background.
Sir, in case no P's are there, suppose fixed place P, installation P, or P as per agency.
Correct.
But service.
Please ask somebody in your background not to talk. There is a disturbance coming.
Just a minute, sir. Just a minute. Just a minute, sir. Just a minute. Now it is clear, sir.
Ah, yes.
Sir, suppose services has been imported, but the vendor is not covered under the three types of P.
Correct.
As
Correct.
you have, then what will be the scenario to comply with the withholding tax?
No, it depends on what kind of service that foreign non-resident or enterprise renting. Suppose if he falls within the purview of the fees for technical services or royalty
Yes, sir.
or
Suppose
any other category
it is
which
technical
attracts
service.
section 9,
It is technical service.
technical service, then most probably it will be taxable at the rate of 10%, because with respect to the double taxation avoidance treaty which India has entered into, most of the cases the rate of tax is 10%. For example, I give you the rate of tax for most of the countries. It is say with Austria it is 10%.
Correct, sir.
Then Belarus it is 15%, Bulgaria 20%, China 10%, Croatia 10%, then Denmark it is 20%,
Okay, sir.
then France 10%, Italy 20%.
That means, sir,
Then for country to country, we'll have to see. You can go to there is a, if you have the direct tax ready reckoner of
yes, sir.
taxman or any other recording
Yes,
ready
sir.
reckoner,
Yes, sir, I have.
you will find in this latest version of direct tax ready reckoner of Vinod Singhania,
Yes, sir.
you will find it on page 140 or
Okay, sir.
R14, withholding tax rate.
Yes, sir.
So with respect to dividend, interest, royalty and fees for technical services, you can see as to what is the rate at which it is on the basis of the double taxation avoidance agreement that this table has been formed.
Yes, sir. Okay. Then what documents the foreign service, the foreign vendor needs to be submitted for the purpose of complying with the DTAA?
No, he will just have to, if suppose one is a non-resident, then probably the what it is called, the certificate of residency.
Yes, sir.
And if suppose you have engaged a non-resident, and
Okay.
he has not even entered into the Indian jurisdiction, has entered into for a few days only, then
Okay.
the question of him being a resident does not arise.
Okay, sir.
And as a non-resident, you will have to just deduct 10% or 15% or 20%, depending on the double taxation avoidance treaty.
So based on tax residency certificate and form number 10F, then DTA will be applicable.
Yes.
Okay, sir. Okay. Okay. Thank you, sir.
Okay. Somebody is querying me, Madam Lakshmi, with respect to his loan and all that. So that, madam, I mean, I request everybody to restrict their query to the topic in discussion. We can individually, you can text me on my mobile number. I will share my mobile number. And so that if anybody has any specific query not related to the topic, then I'm sharing my mobile number. You can text me personally. Okay, Mr. Chaturvedi is saying that to give benefit of DTA of non-resident, we have required a tax residency certificate and form 10F2. Perfect, sir. Thank you. Okay, so with this, I think I should conclude today's session. Thank you very much. Thank you all for joining.
Thank you, sir. Thank you.
So next session, I will be discussing this concept of significant economic presence and this equalization levy. Thank you very much.